There is a crypto company that's backed by Wall Street titans like Blackrock and Goldman Sachs. It's a crypto company that has received more funding than almost every crypto project in existence. Not only that, but this company has been subsidizing the US government spending and has close connections to the Federal Reserve. Its stock is even scheduled to list on exchanges later this year. Today, I'm going to tell you all about a company that's slowly taking over the crypto industry and explain why you need to pay close attention if you care about financial freedom. If you've been paying attention in crypto, you'll know that the crypto company I'm talking about today is the one and only Circle, the issuer of the USDC stablecoin. What many of you may not know, however, is that Circle did not start out as a stablecoin company, and its roots in the crypto industry go very deep. Circle Internet Financial Inc., or Circle, was founded way back in 2013 by Jeremy Allaire and Sean Neville. Jeremy and Sean have been working together for decades to build and then sell or IPO cutting-edge technology companies, notably the Allaire Corporation and Brightcove. One of Jeremy's oldest videos on YouTube is a presentation he did shortly before leaving Brightcove to create Circle. In this video, Jeremy explains how the final step of building a successful technology company is to exit, i.e. sell, to a bigger company or list on a stock exchange. More about that later. On that note, another of Jeremy's oldest videos on YouTube can be found on the World Economic Forum's official YouTube channel. It appears that Jeremy has been a part of the WEF for many years, and if you watched our video about the WEF's Davos conference, you'll know that he was there this year. Jeremy has served as the chairman and CEO of Circle ever since it was founded in 2013. Sean served as the president of Circle until late 2019, when he stepped down to join Circle's board of directors. Jeremy explained in a 2021 interview that Sean is still involved with the company and working on secret stuff. When Circle first began, its focus was Bitcoin payments. Like other payments companies such as MasterCard and Visa, Circle wanted Bitcoin to become the base layer for the new financial system. Now, the financial system these entities envisioned was not open and decentralized, but closed and centralized. To that end, these entities effectively tried to force Bitcoin to fit their vision. They pushed for all the altcoin innovations such as tokenization and smart contracts to be brought to Bitcoin. They also pushed for Bitcoin's block size to be increased so that it could scale, i.e. be faster. This is where things get interesting. According to various Cointelegraph articles from 2014, Circle was the first gold member of the Bitcoin Foundation. For those unfamiliar, the Bitcoin Foundation was founded in 2012 by early Bitcoin developer Gavin Andresen, who pushed for Bitcoin's block size to be increased until he left the foundation in 2016. Those familiar with Bitcoin's history will know that the efforts of these entities to increase Bitcoin's block size hit their apex in 2017 with the so-called New York Agreement. The TLDR there is that 60 corporations tried and failed to convince the Bitcoin community to increase Bitcoin's block size. As a fun fact, the New York Agreement was reportedly overseen by Digital Currency Group, or DCG. Now, DCG owns Grayscale and CoinDesk and holds stakes in top crypto projects including Coinbase and, you guessed it, Circle. Naturally, Coinbase CEO Brian Armstrong also wanted to increase Bitcoin's block size. Now, as almost all of you will know, 2017 saw crypto's previous bull run. By that time, Circle had raised around $127 million from Goldman Sachs and others. Circle had used this capital to create a suite of crypto services, including an OTC trading desk. Circle also purchased the Poloniex exchange. Around this time, Jeremy became a part of the International Monetary Fund, or IMF's, high-level advisory group on fintech. For context, the purpose of the IMF is to ensure that the current US-centric financial system continues without interference from cryptocurrencies and other such technologies. Now, I wouldn't be mentioning this were it not for the fact that Circle and other Wall Street-funded crypto companies held a closed-door meeting with the IMF that same year. Obviously, this meeting was met with lots of scrutiny from the crypto community, and it looks like there have been many meetings since. Now, Jeremy explained in multiple interviews that by this point, Circle could see that Bitcoin wasn't the future of payments. That said, Jeremy still believes that BTC is digital gold and could someday serve as the world's next reserve currency. In a 2020 interview, Jeremy said he holds mostly BTC and cash. This sounds crazy until you realize that the US dollar is on the decline and that central banks are increasingly holding alternative currencies as part of their balance sheets. Jeremy believes BTC will be a part of that alternative currency basket in the next 10 to 20 years, which is consistent with our predictions. More about that using the link in the description. Anyways, thinking that Bitcoin could not be the future of payments, Circle and others turned their eyes to the next best cryptocurrency on the market. This was, of course, Ethereum, which grew significantly during the previous bull market cycle and established ETH as the second largest crypto by market cap. Jeremy mentioned in many interviews that Circle started considering Ethereum as early as 2016 and settled on the decision to build a US dollar stablecoin on Ethereum in 2017. In 2018, Circle raised $110 million from Chinese crypto mining company Bitmain and others to build its stablecoin. That same year, Coinbase and Circle founded the Center Consortium to set standards for stablecoins issued on public blockchains and to govern the issuance and redemption of the USDC stablecoin. Now, it's important to note that any entity that's part of the Center Consortium can mint and redeem stablecoins. The USDC stablecoin officially launched in September 2018 and got off to a rough start. This was because September 2018 was the middle of the crypto bear market and there wasn't much demand for stablecoins. As a result, USDC's market cap remained mostly flat during this period. In 2019, Circle subsequently sold its suite of products and services to focus on its stablecoin. Buyers included Kraken, which purchased Circle's OTC trading desk, and Tron founder Justin Sun, who reportedly purchased Poloniex from Circle. That's a whole other rabbit hole. And speaking of rabbit holes, Circle's head of trading also left the company in mid-2019 to establish CMS Holdings. CMS Holdings is a well-known crypto investing company and recently confirmed to our research team via email that they're also DeFi whales. Now this is significant because DeFi seems to have been the primary demand driver of USDC's market cap growth. This growth appears to have begun around the time that Coinbase began investing USDC in DeFi protocols in late 2019, namely Compound Finance and DYDX. Really gets the noggin jogging. Now, in early 2020, Jeremy attended the WEF's annual conference in Davos, where he preached about the power of programmable money. He also talked about the importance of a partnership between the public and private sector to, quote, support the development of global stablecoins backed by central bank money. Circle even published a stablecoin white paper for the WEF, which I honestly didn't have the time to read because there are just so many rabbit holes there. What I did have time to do, however, is listen to an interview with Jeremy where he explained the assets backing USDC will inevitably be held at the Fed. If you watched our video about the assets backing stablecoins, you'll know that most stablecoins are backed by US government debt. This means that when you buy a stablecoin, you are essentially subsidizing the US government spending. A scary thing considering that many use stablecoins for safety. This also makes it possible for Circle to make billions of dollars in passive income, but let's not go there just yet. All you need to know for now is that Jeremy's repeated prediction that USDC's reserves will be held at the Fed relates to something called a synthetic central bank digital currency or synthetic CBDC. As the name suggests, synthetic CBDCs involve a partnership between a private company, in this case Circle, and the central bank of a country, in this case the Federal Reserve, to issue a de facto CBDC, in this case a de facto digital dollar. As you might have guessed, the IMF and the WEF are particularly interested in this synthetic CBDC setup. It seems the only disagreement is about which blockchain will power a synthetic CBDC. Will it be a private and permissioned blockchain created by a big bank, or a cryptocurrency? More on that in a bit. You know, this reminds me. Another thing that Jeremy has mentioned in many interviews is the prospect of a global stablecoin that will be modelled on the IMF's Special Drawing Rights, or SDR. The SDR consists of multiple national currencies, and Jeremy believes it will eventually include BTC. Spooky. Now, where were we? Yes, 2020. As you can see, USDC's market cap went parabolic during the DeFi summer of 2020 and continued to grow as USDC expanded to new exchanges and smart contract cryptocurrencies. Any algo holders in the audience will know that Algorand was the second blockchain that USDC expanded to. If you watched my recent altcoin update on Coin Bureau Clips, you'll know that Algorand seems to have a very close relationship with both Circle and the Federal Reserve. Circle is based in Boston, Massachusetts, a stone's throw from MIT, where Algorand founder Silvio Micali is based. CBDC reports by the Fed note that the central bank partnered with MIT to develop its digital dollar. Meanwhile, a 2021 report by accounting firm PricewaterhouseCoopers noted that the Fed would begin testing quantum resistance on its would-be blockchain this year. As it so happens, Algorand recently achieved quantum resistance through the introduction of state proofs. The total supply of USDC on Algorand is also a whopping 18 trillion, which happens to be eerily close to the M2 money supply of the US dollar. Probably nothing. Anywho, shortly after Circle announced its multi-chain push, former CLS Bank CEO David Puth became the CEO of the Center Consortium. Now, don't worry if you don't know these names. Jeremy mentioned in a 2021 interview that CLS Bank is the, quote, biggest bank that nobody knows. CLS Bank apparently settles more than $2 trillion of transactions per day between the 70 largest banks on the planet. As per Circle's blog post, David's job is to ensure, quote, the most significant transformation of the international monetary system since the formation of the Bretton Woods system. Oddly enough, David recently stepped away from the Center Consortium to become a senior advisor to Circle. This might have something to do with the exponential growth of Circle, which really began in 2021. That's because Circle raised a staggering $440 million from various crypto VCs, including DCG and FTX. All the while, Circle was offering high-yield USDC accounts to institutional investors that were returning between 8 and 11% per year, according to an interview with Jeremy from February 2021. This eventually led to allegations by skeptical journalists that Circle was engaging in extremely high-risk DeFi activities behind the scenes to earn this high yield. Note that this is the same kind of stuff that crypto platforms like Celsius and Voyager Digital were doing before they went bankrupt. Following the collapse of the crypto market and the appointment of SEC Chairman Gary Gensler, stablecoins began to experience lots of scrutiny, including USDC. It didn't take long for stablecoin issuers to publish details about the assets backing all their billions of tokens in circulation. If you watched our aforementioned video about the assets backing stablecoins, you'll know that Paxos took the top spot for collateral quality. Circle has since changed the composition of the assets backing USDC to match those of Paxos's BUSD. Let's just say Tether's reserves are still, well, not quite at the same level. In case you're wondering, around 80% of the USDC in circulation is currently backed by short-term US government debt, and 20% is backed by cash. Now, assuming short-term US government debt means 2-year treasuries, This means that Circle is earning a yield of around 4% on almost $40 billion of reserves. If you crunch those numbers, that works out to well over $100 million in pure passive income every single month. As I mentioned in one of our recent weekly crypto reviews, there is a lot that you can do with that kind of money, particularly during a bear market and especially in the crypto industry. This incredible potential for passive profit is probably why Circle managed to secure a special purpose acquisition company or SPAC deal for its stock to list on US exchanges. Circle stock is expected to list by the end of this year, but given the current state of the markets, this seems unlikely, in my view at any rate. Now, towards the end of 2021, Circle started to call for reasonable crypto regulations and seems to have lobbied to that end. The company also continued to expand USDC to other blockchains and started looking into stablecoins for other fiat currencies, notably the Japanese yen and the New Zealand dollar. Some of you will recall that late 2021 is when Terra's algorithmic UST stablecoin began to gain serious ground, especially in DeFi protocols where USDC had reigned supreme for almost 2 years. Interestingly, Jeremy had predicted in a 2019 interview that decentralized stablecoins would surface. This is simply because decentralized stablecoins are, well, decentralized. This means that their creation and destruction is done via voluntary free market arbitrage, and that nobody can freeze or confiscate these tokens. Note that all centralized stablecoin issuers have frozen tokens in the past. This occasional freezing of tokens is just the tip of the iceberg too, because in a 2020 interview, Jeremy confirmed that Circle has the power to freeze all its stablecoins in circulation. This is a terrifying prospect when you remember that Circle has uncomfortably close ties to Wall Street, the IMF, and the WEF. It's also terrifying to consider that supposedly decentralized stablecoins like MakerDAO's DAI are backed mostly by USDC. MakerDAO's founder actually called for DAI to drop its peg to get off of USDC after Circle froze a bunch of tokens related to Tornado Cash. More about what happened there in the description. Anyhow, this brings us to 2022. Now, in my opinion, the most important announcement from Circle this year was the release of the Verity platform in February. This is because it seeks to roll out digital identities in cryptocurrency, and it looks like Polygon was the first to sign on. Watch out. 2 months later, Circle announced that it had received another $400 million of funding in a round led by Blackrock, the world's largest asset manager. BlackRock and Circle also entered a, quote, strategic partnership which would see BlackRock manage Circle's cash reserves. BlackRock's buy-in brought Circle's total funding to well over $1 billion, and Crunchbase suggests that this figure is much higher, though the details of all these investments were apparently not disclosed. Then again, it looks like CoinDesk made up for the reporting shortfall, not surprising given the circumstances. In any case, the market cap of Circle's USDC hit an all-time high of over $55 billion in the aftermath of the collapse of Terra's UST and the concerns around Tether's USDT that arose during the chaos. I'll quickly note that Jeremy had admitted in previous interviews that both stablecoins were competitors to USDC. As expected, Terra's collapse and the temporary depegging of USDT led to renewed calls for stablecoin regulation around the world. If you watched our recent video about the leak of Europe's MiCA bill, you'll know that it appears Circle has been very involved in influencing these regulations. Say, did I mention that XRP is a top competitor to the global system that Circle and the Center Consortium are trying to create? Nah, probably nothing. Now, if Circle is leveraging regulations, it would be nothing new. Incumbents have long used regulation to prevent competition. Goldman Sachs' CEO actually admitted this shortly after the bank invested in Circle back in 2015. It's not just regulations where stablecoin issuers seem to be competing either. Cryptocurrency exchange Binance recently announced it would be converting all stablecoin trading pairs, except those involving USDT, into BUSD, which I'll remind you is issued by Paxos. Jeremy said that this somehow benefits USDC, but I highly doubt that, and the proof is in the pudding. USDC's market cap has been slipping over the last few weeks, and it took a plunge when Binance effectively gave USDC the boot at the end of September. This means that Circle has to sell assets behind the scenes to ensure that the supply of USDC is in line with the lower level of demand for USDC following its de facto delisting. To be clear, it's well within Binance's right to make this move. It just goes to show that crypto is hyper-competitive, and every crypto project and company has its way of cementing itself in the industry. In Circle's case, this involves working with questionable global organizations and expanding on-chain. This includes issuing stablecoins denominated in other currencies besides the USD to appease foreign governments and regulators. Make no mistake, at this rate, it's more than likely that every national currency will have its own stablecoin issued by the Center Consortium, a perfect synthetic CBDC. And, as with USDC, all these synthetic CBDCs will be backed by the government debt of their respective regions. This means you'll have no choice but to subsidize your government spending and lower interest rates for institutions when the powers that be inevitably phase out cash. But wait, there's more. Just the other day, Circle announced that it will be expanding to 5 additional smart contract cryptocurrencies and introducing a cross-chain interoperability protocol for its stablecoins. It even announced that it had partnered with Block to bring USDC to Bitcoin. Heck, Jack Dorsey is a Bitcoin maxi. If that didn't make it clear enough, Circle is also quickly taking over every single smart contract cryptocurrency. I reckon it won't be long before we see Circle start to buy stakes in the proof-of-stake blockchains its stablecoins are circulating on, and it's possible this is happening already. With its stablecoin reserves being held by the Fed, Circle could potentially have access to unlimited liquidity, aka the money printer. With the money printer in its grip, Circle will in fact have the power to take total control of every proof-of-stake smart contract cryptocurrency in existence. Case in point, Ethereum creator Vitalik Buterin recently admitted that Circle will have the power to decide the future of forks on Ethereum due to its stablecoin liquidity. At the rate that Circle is growing, this will soon be the case for every other proof-of-stake smart contract crypto on the market. For what it's worth, it looks like Bitcoin's BTC and physical cash will offer protection from the upcoming dystopia that Circle and its affiliates are not so subtly rushing to roll out. I mean, why else would Jeremy hold most of his wealth in cash and BTC? Maybe, just maybe, he knows what's coming. Now, to Jeremy's credit, he wants stablecoins to be as cash-like as possible, meaning transaction privacy and no KYC. The problem is that the regulators will probably never allow this, and the institutions Circle has aligned itself with explicitly want to take control of every transaction you and I make forever. This brings me back to something I mentioned earlier, and that's Circle's co-founders have a history of building up and then exiting cutting-edge tech companies. This makes me wonder whether Jeremy and Sean will do the same with Circle once its stock has IPO'd via the SPAC. This is because Circle could unironically become the most valuable company on the planet if it succeeds in its mission of literally recalibrating the whole global financial system around stablecoins. The only issue with this analysis is that fiat currencies are failing, and stablecoins probably won't help much. This is something Jeremy seems to be hyper-aware of, and I reckon it's why he's so bullish on BTC despite Circle's having ditched Bitcoin half a decade ago. As such, it's probably wise to watch whether he leaves Circle after its IPO. If he does, then it probably means he knows that Circle will inevitably fail. By now, you're probably wondering which blockchain Jeremy believes will support all of Circle's stablecoins. Well, the short answer is all of them. The Circle team seems to be genuinely blockchain agnostic, and Jeremy believes that each smart contract cryptocurrency will have a piece of the financial puzzle. Even so, It's clear that Ethereum is currently the favorite, and that's simply because its security is unparalleled among smart contract cryptocurrencies. Oddly enough, Solana appears to be the official chain for USDC according to the Center Consortium, but this has probably changed after all the outages. In sum then, Circle will probably become the most powerful company in cryptocurrency, maybe even the entire world, but will arguably fail due to the fact that it's fundamentally leveraging failing fiat currencies. The silver lining is that Circle's domination will make the average person comfortable with cryptocurrency, and if I had my tinfoil hat on, I'd tell you that was the endgame all along. Partner with all the international organizations and the financial system, convince them to adopt stablecoins, sneak BTC in through the back door with an IMF SDR stablecoin, and turn BTC into the world's next reserve currency. That is an outcome I would love to see, because the alternative is eternal slavery. You can find out exactly what the people in power are planning by watching our recent video about a new kind of social credit score. The link to that flick will be down in the description. And that's all for today's video about Circle. If you found it as frightening as I did, be sure to share this video and smash that like button so others can find it. If you want to make sure you don't miss my next deep crypto dive, subscribe to the channel and ping that notification bell. While you wait, you can check out Coin Bureau clips for more awesome crypto content and tune in to the Coin Bureau podcast for in-depth crypto discussions. You can also follow me on Twitter, TikTok and Instagram for memes and behind the scenes, and join my Telegram channel for all the daily crypto updates you need. If you want to know how I'm handling the ebb and flow of the crypto market, subscribe to my weekly newsletter to find out how I've been adjusting my portfolio. And if you want to support what we do, head on over to the Coin Bureau merch store and get some cool crypto apparel that fits you and your crew. Links to all these resources and more will be down in the description. Thank you all so much for watching, and I will see you next time. Till then, stay cool, stay safe, and stay crypto.